Good morning and welcome to the new episode of Dr. Lamba's Awakening Call. We have seen Sri Lanka, which was supposed to be a pearl in the Indian Ocean, was doing very well, politically very stable after the Tamilian problem, and then suddenly the bubble burst. It was less a political but more an economic issue. And we know that recession is coming. And this bursting of the bubble of Sri Lanka should not be seen as one swallow making the summer. It should be seen as the prelude to the coming chilling winter. But is Sri Lanka alone? No. Already Sri Lanka, Lebanon, Russia, Suriname, and Zambia are in default. Belarus is just on the brink. Pakistan has been on the grey list for a long time. And at least a dozen other countries are in a danger zone. When in a word, more than a dozen countries are teetering on bankruptcy, we can well imagine how hard life would be when recession sets in. Now, dollar is having a lot of impact. And the traditional debt crisis, if you see, of crashing currencies, 1,000 base point bond spreads and burning foreign exchange reserves point to a record number of developing nations now in trouble. But as I said, it's not only the developing nations. Even countries like Russia are in trouble. So, why is it happening? Where is it happening? And if we look at a geographical size, we'll find that the things are really not a very happy situation, rather it's a very dismal situation. So totting up the cost is eye-watering, makes one feel despondent, dejected, disappointed. And if we use 1,000 base point bonds spreads as a pain threshold, then the analysts calculate that $400 billion of debt is in play. Now imagine $400 billion in debt of a few countries. But if we add to the debt of the countries like Canada, even USA, then it's mind-boggling. Argentina has already far more than 150 billion debt. Next in the line are Ecuador and Egypt with 40 billion and 45 billion debt. Of course, as I said earlier, countries like Canada and USA would be able to tide over because of other factors, not because of their economic policies. No, if we think how the crisis veterans view things, they hope that they can dodge default, especially if the global market is calm and IMF comes to their support, to their help. But would it and should it? That's a moot point. Now let's look at some of the countries which are in the danger zone. First that comes to my mind is Argentina. The sovereign default world record holder looks likely to add to the tally. The peso now trades at nearly 50% discount in the black market. That's the secondary market. Now 50% discount is terrible for any nation, and the reserves are critically low. The bonds trade at just 20 cents in a dollar, less than half of what they were after the country's 2020 debt was restructured. So just 2 years have passed since the debt was restructured, and already the bonds are trading at 20% per dollar. So 80% loss is there. And the government doesn't have any substantial debt to service until 2024. But it ramps up after that, and concerns are creeping in that the Vice President, Chrystia Fernandez, may push and not pay back the money due to IMF. Then comes to my mind Ukraine, the country which is already in the grip of a war with Russia. Because the Russian invasion means that Ukraine will certainly have to restructure its $20 billion debt. And that warning has already been given by Morgan Stanley and Amundi, the heavyweight investors. And the crunch, you would say, would come after a couple of months in September, because in September 1.2 billion of bond payments are due, and Ukraine may not be able to pay that. Of course, it has a sugar daddy, USA. It might come to date, but things are very dicey. Aid money and reserves mean that Ukraine could potentially pay, but let me tell you, the state-run Naftogaz this week was asking for a 2-year debt freeze. And if state-run Naftogaz asks for a 2-year debt freeze, you can be sure this is the tip of the iceberg. And it's quite possible that the government of Ukraine also might follow suit and ask for a freeze. Then comes Tunisia. Africa has a cluster of countries going to IMF, but the most at risk is Tunisia. A near 10% budget deficit, one of the highest public sector wage bills in the world. There are legitimate concerns, and they are absolutely valid, that securing or at least sticking to IMF program may be tough, because the president said is pushing to strengthen his grip on power, and the country's powerful union is opposing it. So Tunisian bond spreads, the minimum investors demand, to buy the debt rather than the US bonds. And they have risen over 2,800 basis points along with Ukraine and Salvador. According to Morgan Stanley, Tunisia is the top 3 list of the likely defaulters. A deal with the IMF becomes imperative, and that's not what I'm saying. Tunisia's central bank chief, Abbasi, has said so. Ghana. Furious borrowing has been seen in Ghana. Debt to GDP ratio is 85%. Imagine, almost 85% of the GDP is indebted. The currency of Ghana, the CDI, has lost a quarter of its value this year. And it was already spending half of the tax revenue on debt, interest payments. And inflation is 30% plus. Now, in a country where the debt GDP ratio is 85%, and Ghana is one of the most important countries of the whole continent of Africa. I shudder for the Ghanaians. Egypt. It is nearly 95% debt to GDP ratio. If Ghana was 85, it's 10% ahead, 95. And it has seen one of the biggest exodus of the international cash this year. They have lost $11 billion. That's an assessment by JP Morgan. And the fund firm partners estimate that Egypt has 100 billion of hard currency debt to pay in the next 5 years. And 3.3 billion is due in a year and a half. Egyptian authorities have devalued the pound 15% and have asked for IMF help in March. But the bond spreads are now 1200 points and the default swaps, credit default swaps, which is an investor tool to hedge risk, price is 50% chance of its success. And when any financial instrument has more than 15% chance, it's a disaster. And here it is 55% chance. Roughly half of the 100 billion Egyptian debt is payable by 2027 to IMF or to bilateral countries, mainly the Gulf. Under normal conditions, they should be able to pay. But these are not normal conditions. Then comes Kenya. 30% of the revenue of the interest payment is budgeted for. Its bonds have lost almost half their value and the currency has no access to capital market. It has a problem with $200 billion bond coming due in 2024. And if you can't pay it, it goes bankrupt. On Kenya, Egypt, Tunisia, Ghana, these four countries, Moody's statement is that these countries are most vulnerable just because the amount of debt coming due 2024 is much more than their reserves are, and the fiscal challenges are going to destabilize. And when the economy destabilizes, political instability is definite there. Ethiopia. Addis Ababa plans to be one of the first countries to get debt relief under G20 Common Framework Program. And this ongoing civil war is an issue. In the meantime, it continues to service 1 billion international bond, but it thinks that it may not be able to do so. Then comes El Salvador. They took the unusual step of making Bitcoin illegal tender. And then, when they did so, they closed the door to all IMF assistance and hope. The trust has fallen to the point where 800 million bond maturing in 6 months trades at 30% discount and long-term ones and 70% discount. Now look at the situation. The government-sponsored bonds selling at 70% discount shows the lack of faith and the trust and the fear of the people. Then comes a major country, Pakistan. Pakistan struck a deal with the IMF, crucial deal for them. It is very timely for them, and they have got, IMF told them that they'll get 1.17 billion in the next 3 to 6 weeks. But would they be able to repay? Already they are on the grey list for the last 2.5 years. The problem is that the Pakistan is also deemed a terror-sponsoring country. Politically, is one of the most unstable countries. Where there is army or bureaucracy or political leaders, none of them inspire confidence. The foreign currency reserves of Pakistan have fallen so low that they are minuscule. Their total reserves are today $9.8 billion. And that's not even sufficient to cover 5 weeks of the imports. What happens after 5 weeks? Pakistan rupee has weakened to a record low, crossing $200 rupees per dollar is terrible. The new government which has come, needs to cut spending nearly rapidly because it's spending 40% of its revenue on the interest payment. Now imagine if you were a debtor and 40% of your income goes only to make the interest payment, not the principal, but the interest payment. Principal still remains. Would you be able to survive? I don't think so. Belarus. The Western sanctions arrested Russia into default last month, and Belarus is now facing the same treatment in Ukraine. So when Russia is a stronger country, it supplies energy to the whole of Europe, so it has some hope, but not Belarus. Then comes the Latin American country, Ecuador. They defaulted 2 years back, but then there have been seen politically the violent protests against the President Lasso and lot of debts. And the biggest problem is subsidies, freebies, what's happening in India as well, especially in provinces ruled by non-BJP government. The government subsidizing fuel and food has increased the public fiscal deficit to 22.4% of GDP. And next year is going to be 2.1%. So Ecuador is just going down. Nigeria bond supplies are 1,000 BPS. But Nigeria's next $500 million bond payment is due. And if they are sensible, they can cover it. But the 30% of the government revenues paying interest on debt is a terrible thing. Now, some people might think that India is in the same condition because the Indian rupee has fallen down. It is not. And the fall of the Indian rupee vis-a-vis dollar is nothing to worry about. That I'll take up in a separate comment, say, tomorrow. But these 12 countries, it looks like, as I said earlier, is a fall before the chilling winter. And these 12 countries going down the drain, along with 11th, which has already gone down the drain, Sri Lanka, show that recession this time is going to be an economic disaster, an economic tsunami. Storms are already there in these 12 countries. These storms are going to spread far out. Both centripetal and centrifugal tendencies are going to exhaust them. And that is the tragedy. The problem is that the market is overpricing a lot of these things. And that is adding to the worry that the economists have about the economic health of the world and the suffering that is going to cause to billions of people all over the globe. Would the countries at large, and specifically financial institutions, wake up and take corrective measures? An imperative need is to take very urgent measures. Let's see how the politicians and the academicians and the economists react. I hope they'll be sane enough. Thank you.